Morning, investor and corporate. Welcome to Digital Roadshow Year's End 2024 Performance Review. This session will run about 45 minutes, including Q&A. Company will start the session by 30-minute presentation, followed by 15-minute Q&A. During Q&A, investor may leave your question in meeting room chat box or use raise your hand function. We will open your microphone so you can ask the question to the company directly. May I now invite Thai Oil Public Company Limited to start the presentation.
สวัสดีค่ะ Good morning to all our investor and thank you for joining today's performance call as part of Set Digital Roadshow. Today's session will begin with a company presentation covering three main topics. First, we will highlight key company highlights followed by a performance analysis. And we will conclude with a market outlook. Afterward, we will open the floor for a Q&A session. Before we begin, let me introduce the management team joining us today. คุณทอแสงชัยประวัติ Vice President of Financial Planning คุณพรพิมานศรีสัตบุตร Manager of Pricing and Commercial Value Management and myself ยธิดาพรประดิษฐ์ Assistant Manager of Investor Relations.Now I will hand over the floor to คุณทอแสง for the key company highlights.
Hello investors. Let me start with the key highlights of the last quarter, the quarter for 2024. Average Dubai crude price dropped by $4.7 per barrel Q-on-Q to $73.6 per barrel on average from global economic concerns, causing energy aspect to revise down global oil demand growth last year to only 0.7% or 0.68 million barrels per day compared to the previous forecast that oil demand will grow around 0.9% year on year. While OPEC Plus announced its decision to delay the plan to unwind its voluntary cut of 2.2 million barrels per day for another 3 months from January to April 2025, as extending the unwinding period to September 2026 to balance the market. Meanwhile, Melbourne OSP increased to $1.6 per barrel from $1.3 previous quarter from geopolitical tensions in the Middle East between Israel and Iran, causing supply concerns. For 2025, we expect crude oil price to soften from 2024 level due to additional non-OPEC supply and uncertain global economic outlook, while Melbourne OSP is expected to increase from U.S. sanctions against Russia oil industry, causing more demand for Middle East crude. As for the Singapore gross refinery margin in the fourth quarter rose by $1.4 per barrel to $5 per barrel on average from increased heating and traveling demand during winter season. For 2025, we expect Singapore GRM to normalize to mid-cycle level from additional refining capacity and uncertain global oil demand growth. Retail factors to watch in 2025 include the first one, the Trump factor, uncertainty surrounding U.S. administration's trade policies with Trump's order to increase tariffs for certain products, including oil, from Mexico, India, and China, effective since March 4th, while China and Canada also announced tariff retaliation. This tension could put pressure on global oil demand growth. Second factor to watch is the U.S. oil sanctions against Russia and Iran, leading to tight crude supply and causing buyers from China and India to buy crude from other regions. And third factor to watch is additional non-OPEC supply, particularly from the U.S., Brazil, Guyana, and Canada, which will put pressure on OPEC Plus unwinding plan to rebalance the market. Next, on Thai Oil key performance highlights. In the fourth quarter, Thai Oil reported market GRM at $5.1 per barrel, an increase from $3.7 previous quarter, from stronger gas oil and jet crack spreads due to higher heating and traveling demand during the winter season. And with the lower trend of crude oil price in the fourth quarter, Thai Oil incurred stock loss of $2.1 per barrel and report accounting gross refinery margin at $3 per barrel. For aromatics and LAB, with weaker PX margin from weak downstream demand and weak PTA margin, also higher benzene inventory causing a weaker benzene margin as well. GIM contribution from aromatics and LAB in the fourth quarter was lower Q-on-Q at $1 per barrel. The GIM contribution from base oil increased to $1.1 per barrel in the fourth quarter from higher product spreads due to higher base oil and bitumen demand after rainy season ended and tighter supply from Group 1 plant maintenance in South Korea. In summary, Thai Oil reported market GIM or gross integrated margin at $7.1 per barrel and accounting GIM including stock loss as $5.4 per barrel in the fourth quarter. And for the year 2024, accounting GIM was reported at $5.6 per barrel, lower from previous year as refinery margin normalized from easing Thai supply after several new capacity addition last year. For the operation performance, Thai Oil continues our business excellence actions to maximize our performance. In the fourth quarter, refinery run was at maximum level of 113%, similar to the third quarter, while aromatics and base oil run rate were lower at 80% and 83% respectively from group optimization. In terms of product yield, we continue to maximize middle distillates production at 54%, slightly higher than the third quarter following higher demand from jet and gas oil. On crude optimization, we processed 92% of the Middle East crude as it used the most middle distillates to capture higher demand, while maximizing domestic and Indochina sale at 85% and 13% respectively to capture higher regional demand. On the finance side, we continue to enhance our cost management through Orchestra Plus program. Despite a higher cash cost in the fourth quarter of $3.1 per barrel, which is seasonal, total cash cost for the fiscal year 2024 is still at low level of $2.5 per barrel. This is in line with historical data. In addition, Thai Oil just recently announced our annual dividend of 1.9 baht per share for the fiscal year of 2024, which represented a payout ratio of 52%. This dividend will be approved in our shareholder meeting in April, and the remaining 0.9 baht per share will be paid by the end of April. Next, will be an update on our strategy. We continue good progress on our 3V strategy to strengthen our competitiveness. For our first strategy, volume maximization, CFP project, the most important project for Thai Oil, on the 21st of February, our shareholders has approved additional project cost of $1.776 billion with the 89.7% approval rate. In addition, we have also enforced security provided under EPC contract of $358 million. This proceeds will be used for CFP capex spending going forward. As for the CFP project way forward, the company has put the highest priority to remobilize and complete the CFP project as soon as possible within the announced timeline. The next project is our investment in Chandra Asri in Indonesia. In the fourth quarter, Chandra Asri or CAP signed EPC contract with the company called IKPT to increase its Butene 1 or B1 and MTBE production more than 25%. This will strengthen CAP position as a sole producer of B1 and MTBE in Indonesia and also reduce Indonesia import dependence on these two products. As for the high value product strategy, last year we have 3 new high value products adding to our portfolio, including the MMA, which is a chemical used in resin production to increase its solubility. Second is Topsol 100 and Topsol 200, a solvent chemical used in lubricants and metal coating production. And third, SDA washing oil, which is aromatic-based chemical used for industrial heavy oil washing. For our second strategy, value enhancement, Thai Oil continue to expand our product distributions, both commodity and specialties, to 3 target countries, namely Vietnam, Indonesia, and India, to serve customer needs and strengthen our geographical coverage. And for our last strategy, value diversification, for our potential new business in disinfectant and surfactant sector, commercial development and new product testing with customer are ongoing to establish market presence and push forward our new business partnerships. For new S-curve, which we focus on new technology and clean energy, Thai Oil in collaboration with PTT is conducting preliminary feasibility study for small modular reactor or SMR, a new nuclear power technology with high safety standards. So that's an overall market update and performance update of Thai Oil. Next, Khun Piyatida will present on our financial performance.
Okay, let's start with the financial performance. The net profit for is 0.8%, showing significant improvement from the previous quarter due to stronger net profit in the dark blue area. Regarding stock gain and loss, Q4 recorded a stock gain of 95 million baht, reversing the loss of 7.5 million baht in Q3. This improvement was mainly the reduction in the stock loss in our reverse. After a loss of 106 million baht, which included a gain of 203 million Thai baht, an FX loss of 130 Thai baht, and spent 703 million Thai baht. And for 2024, the net profit for 2024 stood at 10 billion Thai baht, down from 10 billion Thai baht in year 2023, from softer profit and stock loss. The contribution breakdown of 2020 showing the petroleum loop around 70% the profit, while chem and power contribute about 10% each, and others made up 9%. Looking at the refinery performance, the refinery rate in Q4 remained healthy at 113%, which remained at the same level from Q3 and above the industrial average. This is support higher domestic demand, where it increased by 2% year, which was by jet and cargo demand. In terms of the breakdown, our customer in Q4 was still PTT OR, which was 45%. Our market, the market, which represents 5% of our sales. The remaining portion contribute to sales in country about 13%, and other countries like Malaysia support 2%. For the contribution, market RM in Q4 stood at 1.1 per barrel, improving from $3.7 per barrel in Q3 due to higher distillate demand during the winter. Looking combined with the stock loss of 2.1 per barrel, resulting in an average RM of $3 per barrel. For the food market for 2020 was $3 per barrel, down from $8.5 per barrel in 2020. Average RM for 2024 was $3.5 per barrel, down from $3 per barrel in 2020. Now let's on to the aromatic business. The TPX run rate for Q4 was at 80%, while the average run rate Q4 was 126%. Aromatic IM stood at $1 per barrel, a slight from $1 to $2 per the last quarter, due to a decline in aromatic spread from lower than expected downstream demand. However, for the full 2024, showing with GIM at $2 per barrel, up from $9 per barrel in 2023, mainly a stronger spread. For the base oil, Q4 loop run rate was 83%, lower due to good optimization. Loop GIM 4 increased to 1.1 per barrel, up from 0.5 per Q due to improved spread from both base and bitumen. For the full year, loop GIM slightly decreased $0.6 per barrel, 0.7 per barrel in full year 2023 due to lower spread. Let's go to the net margin cost. On in combined main business, the market was reported at 7.1, including stock loss. The accounting GIM was reported at $5 per barrel Q4. For the full year 2024, market GIM and accounting GIM were reported at $7.1 per barrel and $5.6 per barrel, respectively. That's all for the margin side. Now let's move to the cost side. In Q4, refinery cash cost was reported at 2.7 per barrel. And for the cash cost, the group cash cost was 3.1 per barrel, consisting of 2.5 per barrel of operating costs and $0 per barrel for interest. The depreciation cost was 1.5 per barrel. Let's move on to the power business. It consists of two parts, which is gas contribution from SCP and the net profit contribution from GPSC. Q4 EBITDA was 736 million baht, which was higher than previous quarter due to higher sales, while net in Q4 was lower than Q3 due to no dividend income from GPSC. And for the full year, net profit remains stable at 1.9 billion, similar to last year. Moving to the olefins business, in Q4, net loss was reduced to $0.4 million, down from of $2.1 million in Q3. This improvement was driven by increased demand for the beer holiday and Thai supply due to shutdown. However, net loss increased to $0.6 million, leading to lower product spread. For the solvent business, solvent in Q4 was 167 million, a decrease from Q3 due to a lower price, falling price. However, profit was improved to 4 million baht due to gain. The ethanol contribution in Q4 was softer due to lower sales volume and pricing. Let's move on to the consolidated financial performance. The Q4 was 6.5, improving from Q3, driven by better GM and reduction in stock loss. Net profit Q4 was 2.8 baht, which has a significant recovery from the net loss of 4.2 baht. For the full year, EBITDA was 22 billion baht, a decrease from the previous year, mainly due to lower GRM and GIM as well as costs. Despite again from bond buyback of 1.8 baht, offset some of the loss, result in net profit of over billion Thai baht for full year 2024. If we look at the cash on the 1st of December 2023 was 34.4 billion baht. In 2024, we had a operating cash flow 39.4 billion baht, which driven by net income, depreciation, and gain from capital. We spent 10 billion baht in investing activity, primarily for investment in CFP project. We spent 24.6 billion baht in financing activity, mainly for bond buyback and loan repayment. And if we combine our cash flow activity, after during FX loss, we had an increase in cash equivalent to 39.7 billion baht. Finally, balance as of 1st December 2024, total assets would at 405 billion baht, which decreased from last year, mainly due to a reduction in current assets from lower trade receivable and inventory. Liability will reduce long-term debt at 102 billion baht. If we deduct with cash, our net debt was 112 billion baht. For the currency breakdown, it is quite balanced between US dollar and most of the debt was fixed rate, accounting for 80%. Cost of was about 4.3%, and the average life was 14 years. For the share ratio, debt per EBITDA increased to 6.1 times, while net equity remained 1 time. Lastly, credit rating investment grade from government pre-credit agency. That concludes the performance analysis. Next, I will hand over the floor to Khun Piman about the market.
Okay, should we move to the outlook part? We're gonna start with the market information that cover like the oil price and the refining sector, petchem sectors, and also on the base oil and bitumen part as well. So talk about like the oil market or the crude oil market. It's starting from the demand side. The global GDP this year, 25, is still expect to grow around it's quite similar to last year, which is like 3.3%. The bullish factor, it's gonna support economic and also the demand this year will be on the short-term fiscal policy measure and the stimulus package. There's still some like interest rate cut from the central bank, both of like Fed, especially on the Fed. Even there's only one time expectation for this year, but there's still at least one. And also from the stimulus package from Chinese economy, that could help some like manufacturing and also the service PMI of the Chinese data, but overall like level would be still around like 50%. On the bearish side or the bearish factor of this year, that would be the tariff policy from the US that are going to impact some of the market, especially the country that have the trade deficit with the US the most. The top one is the China country in China, Mexico, and also the Vietnam. Not only impact on the economy, but it also impacts on the energy market as well. That the tariff policy that could impact to the higher the energy price, and maybe that like might curb some consumer consumption as well. But in terms of like overall supply demand forecast for this year, the key house about the energy house, IEA, EIA, and the OPEC, they still like estimate the demand this year gonna be like growth around 1.3%. But together with the expectation of like tariff impact, there might be opportunity that the demand growth this year will be around only 1 billion barrels per day. But in terms of the supply side, quite same picture with last year. The non-OPEC supply will come into the market this year about like 1.6 billion barrels per day, mainly from the US, Canada, Guyana, and also Brazil, which are the same like player comparing to like last year, 2024. But this year the U.S. Production is in the focus as well because of the Trump policy to support like the domestic production as well. But if you look at the OPEC part, the OPEC producer with the OPEC and their partner OPEC Plus, they just keep their unwinding plan as planned. So they're gonna like increasing their production into the market in April this year and take about like 18 months till the total production that they have been cut earlier to be back into the market. So together with the non-OPEC supply and also some of the OPEC supply this year, there will be some certain barrels of oil coming to the market. But if we look at like some specific country that it's in talk of about like the sanction things, which is Russia and also the Iranian one, there might be some uncertainty that there will be some Russian supply and also the Iranian supply that might be taken out of the market as well, but the level would not be that much comparing to like the additional one. So in terms of like the total demand and the supply, Q1 of this year, maybe we might see some deficit picture, but the rest of this year maybe over the supply. So we can say that this year on the crude oil price, there will be some slightly supply in the market and might lead to the slightly lower the oil price level comparing like to last year. Then now we move to the refining sector. The refining sector this year is starting the year with pressure. Even we are in the situation of the winter, high winter demand, but with the gasoline market quite weak, and so that's why the GRM and the Singapore GRM is has been pressure and seems to be lower than like second half of last year. And if we look forward for the whole year this year, the gasoline market is gonna be like stable to soft market, but there may be some opportunity of the demand growth or the improving demand on the middle distillate like products like the jet and also the gas oil, especially during like the winter demand in Q1 and also like Q4 this year as well. So if we move to the specific individual like product, start with the gasoline market. The gasoline market, like we mentioned, the gasoline in Q1 demand is not that good, especially in the US, because of the cold snap that dampened demand, and also the wildfire in California that also like capped the demand in Q1. While the supply in terms of like the US supply, also the Europe supply, and also the Singapore stock, it's still in the normal level. So that's why the gasoline cracks or the gasoline margin is gonna be it has been pressure in this period of time. But if we move to see the whole year, actually the whole year there's still some growth this year, kind of like a steady growth on the global gasoline demand. It's about like 1.1% this year. But the thing that we need to keep watching is about the new supply. Actually, the new supply is mainly from the Nigerian one, the Dangote refinery, which actually the market is already like priced in and also like keep watching since like last year. But if you see, you're gonna see that this year it's a time for the upgrading unit of the refinery to be online. So this will bring more gasoline to the market. So that's why this year we expect to see the gasoline market gonna be pressure. So, but if we move to the middle distillate part, we still some hope on the middle distillate, especially on the jet and the kerosene demand. Overall, like global jet and gasoline demand this year, it's keep increasing. The growth, like 2025 year-on-year change comparing to last year, is about 3.5%, supported by the forecast of like passenger traffic to be increased over the next few years, like in 25 and also 26 and 27 as well. And also together with the heating demand, especially in the Q1 in Japan, that help like support the jet and gasoline, jet and kerosene market to be in the firm level, while the stock is still around like the 5-year average level or the normal one. Next to the gas oil market. The gas oil market this year, the global gas oil demand is keep increasing about like 1.3% year-on-year change. And especially in Q1, that's supported by the heating like demand. If you see the heating degree day in the US, there will be forecast to be slightly like above the normal level. So that's why we think it's still like some supportive from that. And another thing that we can see or we could see from the market, gas oil market this year, it's about the trade flow. After the US like increased the tax tariff from like Canada, so we might expect the gas oil import from like Canada into the US gonna be lower from around like 90% to around like 60% this year. And there may be some flow moving from like EU and the Middle East or the Mediterranean part coming to the US as well. So that is something like change in trade flow for the gas oil this year that we might have some need to focus too. Okay. And in terms of the supply side, if we see the new supply capacity this year, some of the refinery is still on progress. Like we mentioned earlier, the Dangote refinery in Nigeria and also the Yulong refinery in China. But there's some refinery that keep delaying to maybe late of this year, or maybe next year or next few years, like the Mexican one, the Omega refinery, and also some of like Indian refinery that have pushed back to like late this year. So in terms of like overall picture of the new capacity addition and also the additional like demand, this year overall like seems to be quite good, but we need to be cautious because the uncertainty about the demand gonna come from like the tariff in like policy this year that could like pressure the GRM or the refining margin of this year as well. Now we move to like a domestic demand, which is Thai oil demand, the petroleum demand this year. It seems like we're gonna have like ongoing growth, continuous, but it's quite a bit slow. In terms of the gasoline and also the gas oil demand, is increasing around like 0.9 or 1% like year-on-year change. There's still some growth, but the weak domestic economies and also the low commercial car sale gonna pressure or the limit the upside for the gasoline and the gas oil demand. But for the jet, there will be the flight number increasing in flight number and also the number of tourists that we expect to increase this year that help support the jet demand to be growth around like 14%. And also on the fuel oil demand, it seems to be improving like comparing to last year, because last year there's no growth, but this year we have some growth about like 0.1%. So this support by the higher export activity, import and export activity, but it will be offsetting by the uncertainty of the US trade policy that's going to be like cap the upside for the fuel oil demand as well. Okay. Now, so we move from the petroleum market to the petchem side. Start with the aromatic side first. The PX and the benzene market. If you see the PX market, this year the PX market demand growth is higher than the supply growth. So we have the incremental in terms of the improving picture in terms of the overall market and the spread of the PX. But and also most of the new capacity that is coming to be online this year is going to be like in the second half of this year. Unlike the benzene picture, even the new capacity come to the second half, but the additional will be higher. The additional supply will be higher than the demand growth. So this year, and in terms of the benzene market, that's the quite a surplus supply still. But if we see the olefin market, both of the PP and also the PE market, there's additional supply coming to the market quite recent in Q2 and also in Q3. And the capacity addition is a bit higher comparing to the demand growth for both key products. So in terms of the olefin market, we think that's quite challenging, but another year of the challenging year for the olefin market. And then we move to the last industry, which is like the base oil market. The base oil market, its capacity addition is coming to the market this year. It's seems to be quite bigger than the demand growth, especially on the group 2 capacity. And this gonna be like led to the base oil price and also the base oil margin to be a bit softer, but it's softer to like close to the pre-COVID level. Yeah, and then like that's overall for the like market outlook from us. In terms of the recap for sector that we talk about like today, so the crude oil price, maybe a bit softer crude oil price due to the slightly supply, and the refining sector is a bit slightly softer refining margin due to the very like high capacity addition this year. In terms of the petchem, PX still have some room, but in terms of the benzene and also the olefin market, that will be challenging year. And also the last one is the base oil sector. It's slightly soft base oil sector. And this like all of the market outlook today, and also there's a total of like our company presentation today as well. And I think our like all information today is very useful for you guys. And if there is no like question, maybe we're gonna close the session today. And thank you very much for your time, and we look forward to engage you next time. Thank you. ขอบคุณค่ะ
This session has come to the end. Thank you very much, investor and corporate, for joining the conference. If you do need further detail, please feel free to drop us an email. ขอบคุณครับ